The only 4 ETFs you need to retire a millionaire. What if you could build $1 million retirement portfolio with just 4 funds? Seriously. No more stressing over risky stocks, no more head-spinningly complex strategies, and definitely no more second-guessing if you're on the right track. Forget hunting for that 1 in a million needle. We're just going to buy the whole haystack. Today, I'm breaking down the only 4 exchange-traded funds, or ETFs, you need to build a powerhouse portfolio. This is a simple, effective strategy that can put you on the road to financial freedom, whether you're just starting out or have been investing for years. Section 1. The Core Foundation, S&P 500. Alright, first up is the bedrock of your entire portfolio. Your foundation. We're talking about an S&P 500 tracker, and my go-to, low-cost option is the Vanguard S&P 500 ETF, ticker symbol VOO. Think of VOO as instantly owning a slice of the 500 biggest and most powerful companies in the US, giants like Apple, Microsoft, and Amazon. Instead of gambling on one company's success, you're betting on the long-term strength of the entire American economy, which has a pretty fantastic track record. This one fund gives you broad diversification, a blend of stability, and serious growth potential. The S&P 500 has proven its resilience time and time again, making this the non-negotiable core of your millionaire mission. Section 2. The Growth Engine, NASDAQ 100. Now that our foundation is set, it's time to add some serious horsepower. The second fund is your Growth Engine, a NASDAQ 100 tracker like the Invesco QQQ. This ETF hones in on the 100 largest, most innovative non-financial companies on the NASDAQ. This is your direct line to the world of tech and transformation. We're talking about companies leading the charge in artificial intelligence, cloud computing, and biotech. Historically, QQQ has delivered some explosive returns, but let's be real, with higher reward comes higher risk and more volatility. For anyone with a long time horizon, though, adding QQQ can be like hitting the accelerator on your portfolio's growth, pushing you toward that millionaire finish line even faster. Section 3. The Stability Anchor, Dividend Stars. High-octane growth is thrilling, but building real, lasting wealth is also about playing defense. That brings us to our third fund, the Schwab US Dividend Equity ETF, ticker SCHD. This is your portfolio's stability anchor. SCHD focuses on 100 US companies that are not only financially strong but also have a long history of paying out dividends to their shareholders. During a shaky market, those dividend checks can provide a welcome stream of income and help cushion the blow. While it's not immune to market downturns, SCHD is typically less volatile than a pure growth fund like QQQ, adding a layer of resilience to your strategy. With a rock-bottom expense ratio and a focus on quality, it's the perfect counterbalance to your growth engine. Section 4. The Global Diversifier, World Stocks. So far, we've been very US-centric. But to build a truly bulletproof portfolio, you can't have all your eggs in one country's basket. Our fourth and final fund is the Vanguard Total World Stock ETF, or VT. This single ETF is the ultimate diversifier, giving you a piece of thousands of stocks from all over the globe, spanning both established and up-and-coming emerging markets. While the US has been a titan of the market, global diversification protects you from single-country risk and ensures you're positioned to capture growth wherever it happens. Think of VT as a simple, low-cost way to own a piece of almost every public company on Earth, making sure your portfolio is ready for whatever the world throws at it. So, how do you actually mix these 4 funds together? It really boils down to your personal timeline and how much risk you're comfortable with. These are just templates, so feel free to adjust them to fit your own goals. For a younger investor who's all about growth and has decades to go, an aggressive mix might look like this: 50% in VOO for that solid core, 30% in QQQ to supercharge growth, 10% in SCHD for a little defense, and 10% in VT for that global safety net. On the flip side, if you're closer to retirement and want to focus on preserving your capital, you could go with a more conservative allocation: 40% in SCHD for steady dividend income, 40% in VOO for stable growth, and 20% in VT to stay diversified around the world, maybe skipping the more volatile QQQ altogether. And there you have it. 4 funds that give you everything you need: a strong core, a growth engine, a defensive anchor, and global diversification. It just goes to show, you don't need to be a Wall Street wizard to build serious wealth. Now, I'd love to hear from you. Which of these ETFs are you already holding? Or what's your favorite fund for long-term growth? Drop your thoughts in the comments below. Stop thinking you need to be a stock-picking genius to retire a millionaire. All you really need is a straightforward, disciplined plan. By combining these 4 powerful, low-cost ETFs, you can create a portfolio that's built for growth, diversified against risk, and strong enough to handle market storms. The road to financial freedom isn't paved with complexity, it's paved with consistency. Start today, stick with the plan, and let these funds do the heavy lifting for you.